Righty ho, everyone, and welcome aboard. Thank you so much for joining us for Trading Buddies for this Thursday, the 11th of May, 2023. We're carving it up, aren't we? Getting towards the pointy end of the financial year, that is. For me, anyway. I know some of you don't have a end of financial year at June 30, but we do here in Australia. And that's getting ever so close. Sell in May and stay away. Is that the premise for this month? Have we got that on board? Is that the way we're thinking? Is that the way we're going to trade? Don't know. But it's looking kind of suspiciously like that might be the case. We shall see. Welcome to those of you who are joining for the first time. It's nice to have you on board. And gee, it seems like I've been away for 100 years from this venue, with 2 Mondays in a row that were public holidays in the UK, and one to come. Not this week, but I think it's the next week. Next week. So we'll be here on Monday, but I think it's the week after. There's another one. Do they work in the UK or what? Just have parties. Right, let's get stuck in, shall we? And see what's going down in the wonderful world of currencies. But we won't start with currencies. We'll start with that shiny stuff called gold. This is not gold. This is the dollar index. Interesting, though, the dollar index. We'll talk about that a little bit later. Gold, on the other hand, is quite boring. I hadn't been trading the breakout, but let's have a look and see how the week has progressed. Monday would have been a buy. That would have worked. Tuesday would have been a buy. That would have worked. Yesterday would have been a 9 o'clock bar. That's the 9 o'clock bar. So it would have been a buy again. Not sure how that's a news candle, I would imagine. Not sure how that was formed. If it's opened here, I imagine it's gone short first. Might have been tricky. Might have been tricky. Don't know. Those of you who traded that might tell me. Today, what have we got? And those of you here for the first time to trade the gold breakout, it's all about trying to get the first move of London session on gold. It is in trial or what do they call it, beta mode at the moment, or beta, however you want to call it. But if you are thinking about following this or indeed trading it, you would need to do that at very, 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 very low risk. And I will trade this at very, 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 very low risk myself. But essentially what we're trying to do is trade the breakout of Asia session on gold on an hourly chart. So we isolate the open of Asia session, which is the second candle of the day. So that is where we begin, and we're trying to pick the high and the low. Currently, the current bar prior to London session is included. So the high at the moment is here, and the low at the moment is here. But it looks like that may change in the next minute, which is what we need to wait for. We can assume that the high won't be taken out. So the entry level for the long, and this is an OCO. Those of you who don't know what an OCO is, one cancels the other, which means if we get triggered to the buy, we cancel the sell. If we get triggered to the sell, we cancel the buy. We have to wait for this candle to close, which is only seconds away, about 18 seconds away. And we'll use the low as our entry for the short, and we'll use the high as our entry for the long. We'll use the stop loss as the Vicky Verky or vice versa entry. So in other words, if we go short, the stop loss will be the high. If we go long, the stop loss will be the low of Asia session. And now we can identify that. So what we've got is the high of that bar, which is 2036.39. We'll round it up to 2037. So that will be our entry for the buy. Buy stop, you'll note once again, I'm trading this at minuscule amounts of money because it is in test mode. And I just said the entry and I've forgotten already. 2037. So 2037 will be our entry. Stop loss will be the low of the session, which is 2027. 2027. So $10 is what we're looking for. Now we need a profit area. Now the reward to risk here is dreadful on the short because we would have to take our profit at the weekly pivot. For the long, it would be DR1, which precedes that high. So we'd much rather be taken into the long in terms of our profit than we would the short. And we haven't added filters to this. And what I mean by that is I haven't excluded anything. It's just trading the breakout. If I were trading this from my mindset point of view, I certainly wouldn't be trading the risk, which is that far, to gain the reward. Let's monetize that. It's $10, right? We know the risk. The reward is $3. Not good. Not good at all. Before we hit that support level, right? Now, I'm not saying it's going to stop there, obviously, and that's why we'll continue to trade these things until proven otherwise. So that would be our take profit level if we were being absolutely to the letter. If we were being a little bit further than the letter or stretching the friendship, if you like, we would take $9 at DS1. So really we're using the pivots as our exit points. For now, I will use DS1 as the exit point. That's the long, though. We're talking long, so we need to consider this one. 2044 would be the exit point for the buy. And we can place that one. There we go. And for the short, we'll place that at exactly the same risk. So 0.03 on this. Absolutely minimal risk. It's a pending order. It is a sell stop at 2027. And the stop loss is at 2037. And the take profit level is DS1. It's not going to show me what it is. DS1's at 2017, so that'll be a 1-to-1, right? $2017 place order. Okay. Order place, entering here, getting out here if we buy, entering here, getting out here if we sell. Pretty much that simple. Based on yesterday's day doji, today should have more room to raise to ego near yesterday's high. Yeah, look, if I was trading this, and sorry if I mispronounce this, and we haven't met, I don't believe, diapers, that sounds very much like an American term. Diapers. Can you give me a hint on pronouncing your name? And I'm really sorry if I'm mispronouncing, which I'm sure I am. Diapers. Please help me out. It's embarrassing when you get all that wrong. We'll work it out, I'm sure. So if I was trading this today, the last thing I would be doing is entering where I'm entering, right? It's Daryl. Hi, Daryl. Okay, that doesn't look anything like Daryl. No idea why diapers appears. Well, I was going to tell you what diapers actually means. Dirty nappies. Well, a nappy that we call it in Australia. They call it a diaper in the States. Well, they call it in Brighton. Ash, what's a nappy?
It's a nappy.
There you go. Well, clearly the English language is the same in London. Still,
Yeah.
in the UK, still, they should have changed it when they changed from a queen to a king. but they didn't, clearly.
No, kept it all the same, mate.
Brilliant. So if I'm honest, Daryl, I'm not trading this short from here. No way in the world would I trade into that level. It just doesn't make any sense to me. In fact, we're in the middle of nowhere. So you've got to look for, I guess, a breakout area if you really want to trade it. I've got no idea where this is going. Absolutely no idea. Look at this. High test bar here, low test bar here, junk in the middle, inside bar, inside bar, inside bar. Looking at a 4-hour chart. Got absolutely no idea where this is going. My bias is short. But as far as the technical signals at the moment are concerned, wouldn't have a clue. Would not have a clue. Maybe we continue in this range. I really don't know. But my bias is short. That's the only thing I can tell you. Righto, diapers. You've got a new name, Daryl. There you go. Diaper. Why not? or should we just call you we'll just call you Nappy. Sorry, I'm just taking the piss, mate. It's all good. Which is what diapers do, right? Okay, I have got an order in the market, believe it or not. CAD Swiss. Long, yet again. Yet again. Here we go again.
That's all right, mate.
With CAD Swiss long. Yeah, I think it's all right too. The setup's there for me, but the last 3 days have not filled me with any form of joy because the market, well, there's a slight form of joy, and it is that we haven't come back below the trade line or the monthly pivot. So for my money, the next move should be above these highs, but there's no certainty, of course, in anything. Why am I trading it long? Well, because I've been trying to trade it long for about 3 months now, I think. And I think we've had 2 or 3 cracks, maybe 4 cracks. But it reeks to me of this is a clean out, if you like. These lows are historic or all-time lows on CAD versus the Swissy. And I don't expect that we're just going to tumble through those levels easily. So for that reason, I'm looking for a reason to buy. Now, as I keep saying in the Telegram group, my Telegram group, I'm going to look back, or probably in my bias mind, I'm going to look back at that candle pattern in about 3 or 6 months' time and say, wow, what a signal that was. Below the lows and a beautiful tweezer bottom sitting there. Bullish engulfing, but it's all happening for me in terms of a candle pattern. So maybe the stop loss should be down here. I get that part, but when I've got a signal that I'm liking in terms of direction, then I've got to take it, and I'm just taking this one. It'll be a great reward if we can actually get into this and build a position to take us back up here somewhere. It'll be absolutely sensational if it does play out. Mind you, every time it has set up in the recent past, it has failed. And, you know, I'm even going back to here somewhere. But here, expecting buying to come in at the support level, it just consolidated forever and ever and ever, then sold off again. Consolidate, sold off again. But now that's really caught my eye, that candle pattern. So I'm more than happy to trade CAD Swiss long. It's the only thing I've got in the market. I did, in my Telegram group early in the week, suggest that there are a couple of options. Pound CAD was one of them. Oh, we're in the market. Okay. What are we in the gold? What's that done? It's gone short. So there was the weekly pivot. That was the target you would probably like to take first profit at, I would have thought. But we got a bit greedy here. So we're going for pretty much a one-to-one trade. But we are in the market. We'll keep our eye on it as the week progresses, or as the hour progresses. Ash, you'll be pleased to know that, speaking of nappies, going back to my roots, and I'm, you know how it all started for me was euro dollar.
Yeah.
And euro dollar 30-minute chart. which I'm now convinced I need to pay more attention to. So I'm going to dedicate the first hour and a half of Tuesdays and Wednesdays to actually trading euro dollar.
Cool.
Whereas I couldn't do that before. But the two partners of that, the two other amigos, were pound yen and euro yen, but only on the 4-hour chart. Only on the 4-hour chart. So from this day forward until I prove it's a bad idea, I don't think it will be, going back to trading pound yen on the 4-hour chart, euro yen on the 4-hour chart, and euro dollar on the 30-minute chart. So I'm coming back to, if you like, intraday trading, which I'm pleased to get back into. Very happy about that.
Oh, mate, I'm happy to hear that. You know what? I love the pound yen is, I think, historically my favorite currency pair. I love the way it moves.
Oh, nice. Okay, we can actually compare notes then on that.
Yeah, really always like that currency pair.
But I've got to be frank. At the moment, I'm not seeing too much in the market that enthuses me. I do like CAD Swiss. I thought pound CAD. I had pound CAD somewhere, but I don't. Kiwi CAD. Let's talk about Kiwi CAD. It's exactly the same scenario. Kiwi CAD, I thought was a potential buy as a hedge against CAD Swiss, because I think that's pretty much a diapole, if you like. I think if I get a break above this trade line, and maybe what we're seeing at the moment is something that I do like, and if this bar closes as a selling bar tomorrow, I may well look to trade the breakout here. Might get my entry above the highs, but pretty keen on that. That looks decent to me. As far as the structure is concerned, it doesn't, because I've got a clear channel sitting here or at the top of that. So I've got to get clear of it. And that's why I need to see that breakout and pull back before I do. But I'm keen on that. Pound CAD's very much in that same ballpark. Euro dollar's interesting, as it always is. Today, I thought when I had a look at the dollar index that we'd see some movement here. We've got three amigos sitting there. So I'm thinking downside here. If I go to the dollar index, I think I've been saying this for the last 6 weeks, maybe 7. 1, 2, 3, 4, 5, 6. Okay, let's call it 6. This level here, which is 101.5, I thought was a holding point. That's proven to be the case. And I was looking for a rally. Not too much of a rally, but I want to get up here so I can actually sell this thing. Reason is because of the monthly chart. The monthly chart is very, very clear to me that we've come not only back below this horizontal level 105.30, which has got history in the past, but we've broken that level, we've retested that level, and we've also come back into this channel as a false break. Looks clear to me that if price comes back below this level, it's going to head down towards here. There's a lot of cash in there to be had, so I'm very, very aware of finding a nice entry short on the dollar, which of course equates to long the euro or long the Aussie or long the pound versus the dollar, or even buying something like gold. But I don't see gold as a buy right now. I see gold as a sell right now. So it's a matter of being patient, I suppose, until we get the signal to go long. And as I said, the dollar index may be the one that gives us that. Now, I note, and this has only happened since we haven't had a show, or I haven't been here, we've got that very clear rejection of the double top that finally has been reached by gold. We've pulled back off that dramatically. I don't know if that was news-driven or it was simply people taking profit, but this looks very much like false break, false break, false break, false break to me. And when I see that, I'm thinking we're coming back to here, to this level. It's a big call, 1950 or something like that. So it's another $50 off, $70 off or something like that. But that's what I'm looking for on gold at the moment. And then I think I'm a buyer once that happens.
Yeah. Yeah. I'd go. Yeah.
And that all swings around the dollar index for me.
Yeah.
If
The
I can,
dollars it's the currency right now, isn't it? It's the one. I've been wrestling with the dollar really all week, maybe for 2 weeks. In some respects, you could say. I have managed to get in a trade now with the dollar, but it's been an arduous task, mate. I've got to be honest.
it's like me and Cad Swiss, very arduous.
Yeah, yeah. I'll quickly show you my charts. The thing is,
I'm done there. That's pretty much all I've got on my radar at the moment. Billy, every trade I've done on Market Scanner in the past week has tanked. If you're short, then that's good, but I'm assuming you're saying that you're on the wrong side of those, Billy. Not sure what you're trading, but I probably need more information than what you're giving us at the moment. And it does happen, of course. It does happen that you can have a string of losers.
Well, let me sort of show you my back. So this is the environment we're in. The seasonal patterns straight away suggest dollar strong for 2 weeks, and that started last week.
Sorry, mate. I probably need to further answer Billy because, you can come in on this as well. He's asking, should I take a week off and look at it again? Then my funds are just tumbling down, so we need to address that. And my advice to you is, if you've lost confidence, yes, 100% take a week off, and maybe hit the what's it called? Those things you trade no money on. Demo account, yeah. Maybe do that for a little bit till you get confidence back. I've got no idea what you've been trading. Doesn't really mean too much to me, the Market Scanner. That is a good idea. If you are struggling with that mentally, which I assume you are, otherwise you probably wouldn't have brought the question up, then I think that's probably the best thing you can do is get that confidence back, because it's all about confidence, right? When you're trading, it's a matter of certainty, if you like. If I've got certainty that this is going to work, then I can trade it freely. If I've got uncertainty, which is where you are at the moment, because you've got that issue with tanking trade after trade after trade. As I said, I've got no idea what you're trading, but if it's a proven system, it will come good. I've got little doubt about that. If you're just picking something at random off the Market Scanner, maybe you've just got the wrong approach. I don't know. It's very difficult to say, but I would definitely, if you've lost that confidence, take that time out, go back to your demo until you've got that confidence back. Ash?
Yeah, I totally agree with that. I mean, I'll let me give you some context for me, Billy, because this has been my situation for a couple of weeks. If I start with the Aussie dollar, now you know Jeff's absolutely right. You've got to get your confidence back. Really important you get your confidence back. But if we start with the Aussie dollar, my trade on the Aussie dollar was short, and it was probably short here actually. So that was short. It went my way for a little while, but then eventually got stopped out. Now, good money management saved me less than 1%, but still a loss. So that was the Aussie dollar. Then I had the euro dollar, which actually this one's been a bit of a mixed picture. I managed to get in here, got out down there, so that was a good one. So there's 1 for 1, but this one made more money than the other one lost. I got in again on the euro dollar here short, and I closed the position. I had my stops up there, but I closed the position when it started to rise. Now I'm in the dollar Swissy long, and this one, for context, we're at 32. We're nearly at 5 to 1. Is that right? No, but 4.5 to 1.
Four and a bit. Yep.
We're only at 4.5 to 1. Now, the reason I'm mentioning this is that losing some trades is fine, absolutely fine. It's just one of those things. As long as when you are making money, you are making multiples of what you lose, and your system tells you that you've just got to trade right through it. But you've got to know your system. So Jeff's absolutely right about the demo account, and that's what I would advise as well. There's no point in pushing the button if you're confused. There's no point in pushing the button if you're frustrated. What you need to do is get your confidence back and not take a week off. That I would take a week off live trading, but don't take a week off your development, because if you take a week off your development, then you'll come back and you'll still be confused. So it's really important now. And Billy, I'd encourage you to listen in on Monday. I'm not seeing your messages, by the way, because you've probably got it directed to
it's
Jeff.
going direct to me.
Yeah, so not everyone. But if you change it to everyone, you can reply to this. But if I'd encourage you to come in on a Monday, and we'll get George to just go through his process of logging trades, because logging trades is the only real way that you are progressing. Taking trades, you don't progress taking a trade. It's when you analyze that trade that will tell you whether you are progressing or you're not progressing. How are you really doing in the market? You know, is your system good? Is your take profit good? Is your risk profile good? You know, are you cutting trades early enough when they are losers? Now, I am very discretionary, and it's really against the grain for me to kind of go into a systematic approach. But I've really sort of knuckled down and started to go in systematically, and the only way I can do that is by logging trades and analyzing them. But I can tell you that it's changed things for me exponentially. It's huge. It's a massive difference. So you really do need to get in amongst and in between what your trades are telling you. You know, what's your behavior really suggesting about your approach? Using a market scan and taking the trades on the market scan will not work in the long run. And I'll tell you why, because that market scan will pick up every single opportunity. It is our job to use that as a filter to say, these are the ones that are setting up, then go, which is the best? And if there's none of them that we like, we wait for the next opportunity, the next day, the next week, the next month, whenever it is. But we've got to know when our particular system is hot and our particular system is cold, because no system works all the time. My system doesn't work all the time. But because I can tell you, if I took every single trade that my setup suggested, I'd probably be maybe break even, maybe even slightly down. So I've had to add layers to say that is my setup, but I need something before I get there to say, okay, this is my idea. This is the idea that I want to have. Now have I got a setup in that particular idea? So i.e. seasonally, the dollar's strong. There's been setups with the dollar, so I've taken them, but none of them have worked out until really now. You know, so actually net I'm still up, you know, quite a healthy amount, but it's only because the system has allowed me to take the trades and also manage it when it hasn't quite done what it should have done. You know, as soon as I enter here and it goes there, I'm dandy. You know, I know that I've picked right. But if this was to do, you know, back to this this Aussie, if I get in on a short side, let's say here, and all of a sudden it breaks there, it's broken the place that I would have suggested it should have gone down from. So I should be getting out there, regardless of where my stop is. My stop's way up, but regardless of where my stop is, that's the way I approach it, which saves my trades. You know, my thing's all about timing. So if the timing's not there, that means my system isn't working on this particular trade, and it won't work on every trade. So you're waiting for the system to be correct, but you need to have, in my opinion, a decent idea. Now, you know, you'll be an advocate of this, Jeff. You're not a fundamental fan particularly, but you still know what you've got an intuitive sense. You probably don't realize actually that you do have a decent, you probably do know, but you've got a decent grasp on the sentiment. You might not sort of like, you know, get right in amongst the numbers, but you understand the sentiment and the sentiment cycle. So that's almost your thing off the chart. So you have that off the chart, and then you go, right, this is the day that actually the euro is much more likely to get back to that weekly, that daily pivot than another day. So then you look for that particular setup. Billy, sorry,
well, you know, we've had to earn those stripes, though, Ash. You know, it's not a turnkey thing, is it? Sadly,
no, it's not.
There is no turnkey. You've got to earn those stripes, and the only way you can do that is to study the charts and trade.
Yeah, and have something
And
off it. but you know, if you look at now the dollar's really interesting, you know, because and we'll come back to that in a moment actually. But just to finish this up, Kiwi is the weakest of the currencies seasonally. Yes, it's coming down against the dollar, and it should really, because the dollar's the strongest, the Kiwi's the weakest. But if you go across the, you know, round the grounds, Aussie's down against the Kiwi. So the Kiwi's not the weakest there. The euro, okay, that's actually just having a little bit of a rally today. But look at it, really, over the last week, 2 weeks, this has been the euro Kiwi. So the Kiwi's the weakest currency, and yet it's shown a lot of strength. But where would you have bought the euro Kiwi? There's no higher high there. No, not one there. This is in a downtrend. There's no confusion here. And the point is, even if you use the simple break to the upside retest strategy as your signal, there's no signal on the chart. Off the chart, we're saying Kiwi should be short. On the chart, there's nothing here. So your system kind of comes back in, it comes into place after the idea is the point. Billy's just messaged, I think I've been so driven to trade every day. Yeah, I get it. I've not been filtering out the bad options enough. I need to add more filters. No, you probably don't, mate. You don't need to add too many more filters, because you don't want to confuse yourself. What you really need to do is get your trades on a spreadsheet. That's really, really important. Get your trades on a spreadsheet. Now, the great thing about this is, let me just see if I can. Let's do this now. If we go here, no, you're not going to see that chart, are you? No, I can't show you on that chart, actually. You're not going to be able to see it unless I flip it over. Oh, I might have to. We might have to come back to that because it's going to take me a little while to sort that out. Do you know what would be quite useful, Billy? If you're prepared to do it, is come on live. You don't have to come on camera, but you know, if you come on with your voice and you can, we can give you power to share your charts. Oh, amazing! How you doing, buddy?
Yeah, good. Thank you. And you?
Awesome, mate. Yeah, really good. Now there's a couple of things that I'm going to give you. Have we got time to go through this, Jeff, a little bit?
yeah, we have. Look, I've done pretty much my stuff. I know Phil's going to be filling up the best part of half an hour with his, I'm sure. But okay, absolutely, we've got time.
Okay, great. Now, can we give Billy power to share his chart?
Oh, I can do that, can't I? Hang on a second. Billy, where are you? There you are. Make. There you go.
You got it.
You're
right.
Empowered.
Billy, do you want to share us your chart if you're okay with it? If you feel a little bit conscious, it's okay, mate. But if you, in fact, at any point you're feeling like I don't want to do that, just let me know. But if you share your chart, if you can share your screen.
Yeah. Can you see it?
No, not yet.
Oh. It says it.
I can.
Oh, you can see it, can you? Okay. All right. All right. Zoom may have crashed for me, so I might mop him back in 2 minutes.
Okay, I think Aisha's gone out, has he, for a couple of minutes and rebooting. So I guess you're going to have to explain this again when he comes back on. But where are you finding issues, Billy, at the moment?
So I've been tuning into the daily wave rider thing with Paul and placing those trades. There's been a bit of a mixed bag, but kind of, and I did the 4 hour and the 1 hour, but I couldn't make the live training, so I watched the videos, kind of wrote everything down. Thought I'm going to give this 4 hour thing a go. I just think maybe I've messed it up and I need to kind of have another look, because I placed some and they started to go well, and I think I should have closed them out instead of just waiting to see what happened. So I think maybe it's also part of my learning curve to close trades when they're clearly going badly and to also maybe close them if you think it's topped out and it's not going to go any further. So I had one the other day that I was just about to make $25 on, left it and ended up losing $25.
Right.
Yeah, that's
So
an art. But generally, you'll find that it does it for a reason, whether that's a fundamental reason or a technical reason. You'll generally find that is, it's not random. You may think it's random, and randomness does happen. There's no question. But generally speaking, there'll be either a fundamental reason, like a news announcement, somebody's declared war, or Trumpy's raped someone again, or whatever. Mm-hmm. Something happens, right? Or there's a technical reason, and that will be a pivot, trend line, horizontal level, whatever the case may be. The market reacts for a reason, and that will be either technical or fundamental 99% of the time. Everything else can be random. That's 1%, right? So understanding those things takes time. There's no question. And no matter what your system is, if you're chasing 3-to-1 or 2-to-1 or whatever the case may be, there can be interruptions to that. And they can be fundamental, they can be technical. So you need to be aware of those technical levels. And if you're saying, let's say you're up to $25, but you're at a daily resistance 1 level, or whatever the case may be, that's a time where you need to consider what happens next. And what happens next is generally going to be at DR1 or a horizontal level or a trend line or whatever the case may be. It's going to come off that level. What we don't know at the time is how far it's going to come off that level. And that's the challenge that we've got as traders. Do we hang on? Do we take profit? Do we move our stop loss? All those sorts of things. But if they're going against you, recognizing that you're wrong is an art form, really is an art form. And I that challenges me every single day of my trading life. And where am I wrong? But recognizing before you make the trade or before you enter the trade where you are going to be wrong is probably the best form of defense that you can have. Ash, sorry I interrupted.
That's okay, mate. So Billy, this is going to be sort of like the way that I think is going to be best for you to move forward. Now, the first thing is if you right-click your account history, now just looking at your loss there, mate, it doesn't look that bad to me. So if one thing that it does suggest is that you've got pretty good control of your head even when you're losing, which is good. Yeah. You know, because a lot of people that loss would have looked a lot bigger as they chase the market to try and recover. So you've got sort of one aspect of the skill. I don't know if you've got it down necessarily, but you've got pretty good control of it right now. So that's really good. Now the other thing is, now if you right click in your account history, right now you see it says save as report.
Yep.
Yeah. So when you click on that, now what that will do is that will open up the statement for you. And you can now pretty much drag and drop that into an Excel spreadsheet. So you don't even have to log every trade manually if you find that a little bit laborious.
Yeah, I had started, so I do have a journal, been doing reflecting. Brilliant. And all of that sort of stuff. The recent, I mean, I can't see the date because that thing's blocking. The last one I did was the 5th. So I've got, I mean, I think the past few, I haven't really understood what I've been doing for the past few days, but I was keeping a journal.
Great.
I think if I continue to do that, I should hopefully be able to build up a better idea of what works and what doesn't.
Yes. Well, now, so this is the thing. Now, your journal should be telling you. Now, the other thing you can do, of course, is save the picture. Do you know how to do that as well? You just right click on the chart, and you can save as picture, and so you can put that into the journal as well. But the first thing that you really need to do, because logging the trades is, as I say, it's very boring when you don't really have a reason to log. All you're doing is logging the trades. But what is it for? And what it's for is to ask questions. What questions do you need to ask the journal? And this is where you need to start looking back on your trades. Now, if you drag, I don't know if you know about this one as well. If you grab, let's say the pound yen, you see that pound yen that's highlighted? Left click and drag that onto the chart. Now you will be able to see a dot. You see those dots at the top there? That's telling you the trade. That's showing you the trade. Top dots where the white line is. Yeah, those there.
Yeah.
That's telling you, that's showing you the trade. So you can go back and visually have a look at it. Was the system right? Now, when you look at that, what was the problem? What did you do? What was the reason for getting into the trade? And if your reason, let's say, was a certain bar, then maybe what you need to be doing is asking the journal, asking the spreadsheet, how good is this bar at giving me the signal I need?
Mm-hmm.
You know, so what you want to do is start generating questions to your journal and allowing it then to test out which are the best which are the best signals and which are the worst signals of the way that you're trading. How often does it bounce? I'm not sure which you're trading. Is this the Wave Rider?
Yes.
Yeah, cool. Okay, so this is where we can ask about the EMAs. We can ask about day of the week. You know, we can ask about the best bounces, the best bars to bounce from, all these different types of things. Now, the day of the week's a really interesting one, because and it seems like it would be quite arbitrary, but if you look through fundamental data, what you'll notice is midweek tends to be much more common to release the big data points in the United States, particularly. And then you'll sort of like start to see, actually, well, the dollar tends to give me a positive result on a Wednesday or a Thursday. Why is that? Well, then you might start to drag yourself towards the fact that they're the day that the fundamental data is released for the dollar. For the Aussie, you'll see certain times a month that the Aussie sort of will be releasing interest rates. You know, they tend to go first. So you'll see when the interest rate announcements happen throughout the month for the different banks and the different regions, and you might start to get a feel of, is it more likely to move at this particular time of the month? So these are sort of questions you can start asking your journal when you've got the trades logged. So it's really important not just to log them, but then start thinking, what do I need to know? What could I ask it in a very simple way? Because that's when you add the filter. There's no point in adding a filter without testing it first. Yeah. Do the seasonal charts help you? Do the seasonal patterns help you? Because if they don't, there's no point in using them. Does COT data help you? Because if it doesn't, there's no point in using it. There is kind of, I mean, you can get the COT data if you like. The problem with the COT data is in fact, COT data for the daily Wave Rider is probably quite good, because it's a much more it's a longer term picture, the COT data, whereas the fundamentals. And I tell you, mate, right now the markets have really changed. You know, from when Jeff and I have started trading, the markets have changed immensely. God, yes. And I tell you, one of the main reasons for that is because all of a sudden we've got data dependency, whereas before the market was much more forward guidance, based on forward guidance. So the Fed would say, next year we're looking at this, and the market go great, and then they sort of like start taking positions of what's coming later. Now you see a CPI data print released as it did yesterday. The dollar went boom, just tanked. Was it recovered today? I mean, we don't know yet. It could be because we've got jobs data coming and everybody's expecting the jobs data to be positive. It could be that CPI data print yesterday was actually just a bit of a sort of an anomaly in traders' reactions, because the dollar right across the board is strong this morning. And we had the CPI print yesterday, and I can tell you the CPI print wasn't that weak. It was still, in and around 5%, 4.9% on CPI. Actually, core CPI was at 5.2%. So it hadn't really dropped much. And I looked at that reaction. I thought, that's odd. Why are people still like, why is the dollar tanking? That's hardly, the data's hardly moved and the dollar's tanking. And as Jeff says, that could be for a technical reason. It might hit a technical point and then, bang, it just like, oh, that's where all the traders were in. Now today,
in which case the algos are going to pick it up. And away she goes again.
Exactly. But the data dependency is huge in the market right now, which actually favors short-term traders a little bit more than long-term traders. So the Wave Rider actually, it could struggle from that day-to-day thing, and it might need a little bit of adapting. It doesn't mean that it's a bad strategy, but it might need some adapting. You know, right now the environment might not be quite as good as it can be. So we need to figure that out, and that's when, you know, your journal comes into play, the photographs come into play, dragging these trades onto your charts to really look over them and analyze them. But as I say, taking a week off isn't the answer, but maybe taking a week off live trading while you do some of this work is the answer.
Yeah, I think that's a really good idea, because I need to find out what works, and instead of just throwing stuff at the wall.
Yeah. Yes.
Throwing real money at the wall, I can throw some fake money at the wall.
Yeah.
And then figure out what works.
Yeah, exactly. And you can be you can take a lot of risk, and you can be really brave with those demo accounts, because what you're trying to do is really scrutinize the strategy. So you can say, right, here's my question, and I'm going to follow this rule regardless of, you know, whether the demo account's making money or not. I'm going to put it on and see what happens over the course of the next week. Really, a basket of 30 trades is what you really need to get a decent market indication of where the market is. Anything less than that, you can get a little bit distortion. Anything more than that is even better. So 30 is really the minimum. But
a month, a week,
oh, it doesn't matter, over the course of whenever, really.
Okay.
You know, if you're taking a trade every day, then of course you're going to hit it in a month and a half. But yeah, so there's a few things that you will need to add. But I would also, the only thing I would suggest when you're sort of saying about adding filters, the only thing I would suggest is seeing if you can add something that's off the chart. You know, not extra indicators and anything like that. Is there something off the chart that interests you? Is it seasonality? Is it COT data? Is it fundamental? You know, is it the fundamental picture? Which I have to say, as I say, the fundamental picture is a hard thing to grasp right now, because it's changed. Because people are, and I guess because news is so fast now, people really are data dependent on the day, whereas before it was a lot more, you know, how will this permeate over the course of the next 3 to 6 months to 18 months even? You know, so that's just where we are. So the fundamental picture might still be of interest, but it might not be the thing for you. But I would suggest looking into something that you might be able to get some sort of grasp on, and seeing if you can add that idea before you then look for trades. Yeah,
good idea.
Cool, mate. Okay, well, hopefully that helps.
That helps, Billy. I hope it does. Yes, absolutely.
Yeah, thank you so much. It's helped me get out of the downward, what am I doing? And it's given me something to kind of focus on.
Great, mate. So, great. Well, that's what it's about, isn't it? It's having something new to focus on. But as I say, mate, looking at your account, you're okay. You know, the losses are normal, and I'm pretty impressed. I've got to be honest, mate, because you're very new. I remember that you were on the last IFP, weren't you?
Yes.
Yeah, and I remember the fact that you've taken those losses and you haven't. I would have blown up the account by now. You've obviously got a pretty good handle on your, you know, because when I started, I hated losing, and I was so frustrated. I was like, right, get that back, and then obviously you lose again. So you've done really well, mate, controlling your emotions to the point where you just go, no, this is going to be, you know, the way I'm going to handle it. I think you've got a really good temperament, so that will help you going forward. You just got to get over this hump.
Cool.
But of course, the other thing is, Billy, if you are in that. What do they call it? Whatever it is, mentorship pathway.
Yes.
I think that's what it's called. Mate, there's help out there. Just ask. And you know, that's one of the hardest things to do, because you're admitting that you're full or you're failing, right? You think you've got a flaw. Nothing could be further than the truth. It's completely normal. And asking for help is sometimes the hardest thing to do, but the best.
Yeah, I mean, I'm realistic. It's going to take me a good while to learn this, to become consistently profitable. And that's what this whole support system of really experienced people is for, to kind of jump in and go, I don't know what I'm doing, help, and then get some advice, go off and try that, and then I'll probably pop back in a few weeks. And
you're always welcome in here, mate.
Speaking about jumping in, do you mind if I had a comment or two there, Jeff?
Oh, come on in, Phil.
Phil.
There you go, mate.
Yeah, good. How are you? Billy,
Yeah, look, had a heck of a day. Another death in the bloody, not the family, but just another day, you know.
Another day. Billy, I just jotted down a couple of comments here along the way. You seem to me like you got your head together pretty well. But the notes I've just written down are emotion. So work out if emotion is making any decisions for you. I find that was really important to me when I started. The next one I've got is when you review your trades, review them with a positive aspect and then review them with a negative aspect from the negative side. So you look at the trade, if you've got the ability to put yourself outside the emotional part of it, just when you're really looking at your trade, imagine you've got a negative view on it and work out how it might have worked out, and then do the same in a positive aspect. That'll give you two different versions of what you're looking at. So when you're analysing your trade, you can sort out, because if you're an internal optimist like myself, you'll be really careful that you don't see everything in a totally positive manner, which biases the way you think. So you're automatically constrained by your own mindset, you see. So that's another one. The third one I've got here is eventually you need to get to know your chart like a cow knows its calf. And what that means is that eventually, that I had a classic the other day actually, and a particular pattern came up, or a bar came up, that's right, because I'm tutoring a couple of people as well. And this particular thing looked attractive, so it was pointed out to me. But when I looked at it quickly, that bar was completely out of context. It just shouldn't have been there. And it turns out there was some news that influenced that. So you will end up looking at your chart and go, hang on a minute, that type of chart shouldn't be here. It should be over there or up here or down, whatever. I think you get the picture. And the last thing I've got here is, which is probably pretty important, it was for me, is that you've obviously had some winners. You've had some winning trades that have turned bad for you. In that case, in the early days, what I used to do eventually when I worked it out was close that trade early. Now, if you start looking at your chart and you go, oh, this is starting to look good, close it. Then you close on a positive note. That's an ego booster, a confidence booster. I say not an ego booster, a confidence booster to go into the next trade. If you always just take that $10 loss, it starts weighing on your mind as a negative. But if you take a $10 profit or whatever it is, a $5 profit, it's a profit you've had a win, and that's a psychological bonus. They're just a few notes I took, mate. Listen to your story.
Well, thank you very much. You are exactly right there. That $25 loss that I had was at one point $25 profit. And yes. I sat there watching it, thinking, which way is it going to go? Kind of learning how this stuff works. And then I kind of set in my head, well, I'll come out at 15. And then I kind of went off and did something. And then suddenly I was in minus numbers. And I was like, I'll just wait for it to recover. I'll wait for it to recover. And I was like, I just want to see what happens, to kind of learn something, to see if it can go all the way so close to my take profit and then stop me out. Or whether I have to close it myself. So that one was an interesting one. You're right. I should have closed it, but I just watched it, and I watched it go.
Do you know what, Joe?
And you just said, oh, sorry. Yep.
No, I was just going to say, Billy, to say that you should have closed it isn't really accurate, because you don't know whether you should have closed it, because you haven't done enough data gathering. The money management aspect actually is possibly the real key to this. And this is where you will use your demo account and practice on different money management. Do you need to move your stop at a certain point? Practice that. Would it be better to get out at 1-to-1? Practice that. Would it be better to move stops at break even? Practice that, and log all these things down. So when you've got 30 trades, and you could do it on one trade, so you could do one trade and put in your spreadsheet what would have happened if I'd moved stops behind hourly swing or whatever it is. Log that in one column. What happens if I come out at 1-to-1? What happens if I come out at 2-to-1, 3-to-1? What happens if I leave my stop at break even? One trade, you can log all those different things by then seeing on the chart which price it would be at. And that money management will start to help you, because you can't say anything for definite right now, because that you and that's the problem with one trade. It can hurt, but it is one trade. And that doesn't really sort of like start to build a system, because in a year's time, it might have been the best thing to do, let that trade go to zero or even a loss, because you might find the next 10 would have all gone to your profit target or beyond. So don't get too caught up on that one trade is the point. Get the data down, and then you'll figure out what the answer is.
Cool.
Yeah, you said something valid there, Billy. To me, was you was up $25 and you thought, oh, I don't really know where this is going. Well, what I used to do in the early days, if I don't know where it's going, I just get out.
100%.
Yeah, that is yeah. If you haven't really sort of like figured out the system, you have to do that really.
Okay.
And it's the same when you're entering a trade. If you don't know where it's going, why the hell would you enter it? It's as simple as that. And I'll tell you one thing that helped me, Billy, too. When I started thinking, and this is always in the negative, gee, I wish this would go up, or I hope this will go up. As soon as that thought enters my head, now it's time to get out, because there's no point hoping and wishing.
Absolutely. Absolutely. Hope is not a strategy.
Yeah, absolutely right. Should we get to you, Phil, as well? We got sort of some extra little bits and pieces this week. Thanks so much, Billy. Appreciate you coming in as well, mate, and sharing this.
Cool. Thank you so much, guys. I need to shoot off, but thank you so much.
Yeah,
I'm going to take that on board, and I'm sure I'll be back at some point.
Nice one, mate.
Cheers,
all right.
mate.
Good luck.
Good luck, Billy.
Actually, Phil, while you're changing over, speaking about getting out, I'm getting out of the gold trade. That candle that has formed on 30-minute chart is telling me that this is going to bounce off the weekly pivot again. So I'm out of here, closing just slight profit.
Well done, mate.
I know I shouldn't be doing that because we should not be adding filters, but that's what I'm doing.
You guys got my screen there?
Yep.
Actually, I wasn't here last Thursday. How'd you blokes get on? Did you and Phil have a fight last week?
No, it's great, mate. It was great. It's
That's
I
good.
mean, it still eludes me to a degree, but I'm still really enjoying it.
Well,
Actually, if there's any feedback from people in the room, we'd love to have that as well. Where are you up to, Phil?
oh, mate, I've got no idea.
Brilliant.
I just thought for a bit of a confidence booster in the system, I've got one that's a little bit serious and one that's a bit more funny, I suppose, today. But this one, I just thought, I did some homework on, we spoke about time by degrees on either side of the planet, Ash, last time a bit, and I decided I identified for myself anyway that it's basically the same, give or take the time zone. So that was I thought I was happy with that. And I thought I would apply it to the chart which we already had. But as I said, I was inexperienced with the FTSE. But what I thought we might do just now for the sake of it is randomly, you just pick a high point or a low point and I'll identify whether it was time by degrees.
Okay.
Anyway, I don't care who does it. This just happens to be the FTSE, obviously, because it's something you know. And I just thought, if you just identify a point, I've got my ephemeris with me. We won't go too, I don't care, but it'll take longer time if we go back too far. But maybe just what's on the screen, if you just just randomly pick a high or a low that might be tradable, and I'll just identify the time by degrees.
All right. Well, I'll tell you one I think is of interest is the 20th of December, 2022.
The 20th.
Well, yeah, you're in the right cluster. It is that area there. My low is on the 20th, but yours might be slightly different.
Oh, I see. Oh, yeah. Well, there's the 20th. That's about it. So it's about there.
Yeah.
Okay. We'll lock it in, Eddie. The 20th of December.
Nobody knows, Eddie.
Oh,
you're not in Australia. You're not in Australia now, mate.
Okay, time by degrees as a matter of interest is the 22nd. So bearing in mind, we've done no 30-degree cycles. This is purely on time by degrees, and we know what are you 10 hours behind, isn't it? Roughly for us.
It is 9 o'clock here.
5 to 9 now, right? So 1700 here, 09 there.
Oh yeah. So it's
So
probably,
yeah, that's 10 hours, isn't it?
okay. So that gives it at least the next day. So give or take our day or two variations. That's time body.
That's only 8 hours. Sorry.
Oh yeah. Well, whichever. Yeah. Sorry, mate. I just had a rough idea. I got up here. I don't know anyway what it worked out. Oh, Ash was 10 o'clock in the morning. We were 7 p.m. Yeah, that's about right, isn't it? So okay. So that one's time by degrees. What's the next one you'd like?
You still with us, Ash?
Yeah, I'm still here, mate. Yep.
So we'll call that one time by degrees for the sake of the exercise, because remember we've got to put our indicators on it then to tell us if we're going to trade or not. So that'll come in. But we'll go through those in a minute.
Can you just explain again why that is time by degrees? That the 22nd.
Well, that particular date comes from. Now I probably should give you these. So the 22nd is based. So I worked this out for our market, obviously, or I was taught this actually.
Yeah.
The 22nd is based on a high in the Aussie market on the 23rd of November 1994.
The high of the Aussie market. So okay.
Well, I'm not sure whether it was a high or a low. I think it
okay.
might have been a high, but it was a significant major point in our market on the 23rd of November 1994. And on the 22nd of December 2022, the sun was in exactly the same place over the Sydney Stock Exchange as it was on the 23rd of November 1994.
Right.
Coincidentally, that's the summer solstice here as well, right?
Correct. Seasonal time as well.
Mm-hmm.
Shorter, the longest day.
Yep.
Is when you work out where the sun is that a free accessible website that you can access, or do you have to pay for it? Is that some stuff you have to pay for? Because I looked at
I bought a book called The American Ephemeris for the 21st Century.
All right.
And this one's for Sydney time. And the ISBN number is 0-935 127 -59 -3.
What's that? What are those numbers? Sorry.
The ISBN number of the book, the International Standard Book number.
Okay.
Did you write them down, or do you want them again?
Yes, please, mate. If you'll have them again.
0-935 127 -59 -3.
Thank you.
So it'd be Amazon or Booktopia or something like that, right?
Oh, mate, I bought it off the Safety in the Market crowd. Just put that ISBN number, it'll come up somewhere.
Great, thanks, Phil.
Safety in the Market were the people I paid money to learn to trade from. David Bowden. So that was that. So that's that day. That's where that date comes from.
Amazing.
Okay, so you pick another one.
So just to be sort of completely clear, the sun is in the same place. So it's got the same angle in the sky.
Yes.
It's the same height. It's the same. What are the parameters that are involved in that?
It's exactly the same spot in the sky.
Okay.
At midday.
Throughout, how many parameters do they need to calculate that? Everything.
That's just a fact.
But when you say exactly the same spot, in accordance to which
astronomically.
Yeah. So like, let's say the angle. So how many parameters are they calculating for that? The angle. The
angle of the sun was 0 degrees.
Yeah.
27 minutes and 32 seconds on that particular day, and it was the same on the 26th of December 2022, the date that you just selected.
Right. Right. Okay. All right. Cool. Okay, mate. So what that gives us a time by degrees then.
Yes.
And it relates to that particular high in the Aussie market. Is that the only thing it relates to?
No, it relates to the 22nd of December as well, doesn't it?
On this day, yes, but just those two links. Is there any other links? Because would that be a bit tenuous? The fact you've got this low, we got also this high in Australia. Couldn't you find that all the time?
You can find it once a month. Yes.
Okay.
Yes, absolutely. And this is this is the purpose of this exercise. You are correct.
Yeah.
So if you pick some more points, you'll see the pattern emerging.
Okay. So in that case, let's have a look at the high after that then. So we've got that one. Now the high on the FTSE would have been the 16th of February 2023.
I can already tell you it's time by degrees. 15th and 16th is always time by degrees.
Is it?
Yeah. So the 15th of February in 2023.
Yeah.
In actual fact, I'm wrong. On that day here, it was the 14th of February.
Okay.
And yet again, the market turned.
And you're right at the top.
Yours looks different to mine. Now that point for me is the 17th of January.
Oh, sorry. You said February, didn't you?
Yeah. 16th.
That's right. And time by degrees here was the 14th. It was my time by degrees for that particular thing. So at that point, we're certainly on the lookout. Now, as we showed with the 30 degrees, they don't always line up perfectly, but give or take a day or so, you see. So then we'll leave it with those two. We can do this easily. Then we put our indicators on, which tell us, should we be trading it or should we not? So I would suggest to you that here, looking at the MACD, looking at the DMI, looking at the RSI, they are saying you couldn't possibly trade it on that day, obviously, but they are saying, wait, aren't they? There's nothing moving. They're all going sideways.
Yeah.
But now you are set up ready for a trade.
Yeah.
Okay. So once we get to a stage, we think, well, this might, now bearing in mind that we have a 30-degree cycle here somewhere, we'll come to that in a minute. But then we start looking at, if we're only using the indicators at this stage, just for the sake of the exercise, then we would see where, obviously, you're going to be watching this until these indicators start to turn. The DMI crosses over or leaves the ADX line there. So we're on alert anyway, if nothing else, because see the positive starts going downhill. So that's obviously it's heading down, and we don't know that on the day. So we've got to choose the next day so we can possibly trade it. The dip wasn't really there. Then it starts going down. So reality is that's where it might turn. That's with the DMI only. We back it up with the MACD because that's also a slow indicator, and that one was even slower. But there it is. You'd start looking at that seriously there, where they cross over. That's when you're on high alert, and then you'd look at the RSI, and that's an early turner. It did turn. It began to turn here, look, but it mucked around for a couple of days, like because the chart did, and then there, certainly, that day it's starting to head down. So then we'd be starting to look at taking a trade. We've got more confirmation with the DMI, It's certainly starting to head down now, even though it's because the market's moving slow, it's moving slower. But there you go. So then at this point, you'd be looking at, certainly look at taking a trade, and the indicators are telling you that it looks like Now it's not. It's also, I wouldn't say it's mega strong because of the angles of the actual indicators, although this one is pretty definite there now, finally, but it was a lot of mucking around here, so you'd be looking to be waiting to be secure to get to that one. And of course, one of the indicators I use is how far above the MACD 0 line is the actual fast and slow moving lines, and it's not that high. So that means that it's not a super strong trade, and that's why you can see the charts telling us with hindsight now, but if you were watching at the time, you'd see it's mucking around. It mucked around here and went down a bit, then it's mucking around there. You would have waited a day to see what was going on. As I said, you can calculate all things you don't really need to. And right through to there, you'd be still going, well, that's okay, but it's still mucking around. It's still going sideways. So we wouldn't take that trade back here, would we? Because with hindsight, because it's not, we haven't got a really positive indicator to tell us. But the point is time by degrees was there. Now, bearing in mind, at the end of March, the beginning of March, there's another time by degrees date about there. I just happen to know that. And there's also one about there. So they would be then adding strength to what we're looking at.
Yeah.
So the important thing about this is that we get these signals, which are not always 100% like I said, but this keeps us out of the trade.
Yeah. Yeah.
So it tells you, importantly, what not to trade as opposed to what to trade.
Yes.
And back here on this one, we just go back there just for the sake of the exercise. That's our actual time, bear in mind, that's, give or take a day for England, whatever, right? So you would be, our chart would be a day later. So we'd actually be here, we'd be, I'll get it stopped there, that red date there. What's the next date? That one's 21st, isn't it? What did you say, the 22nd, did you? What date did you got?
Yeah, 22nd, yeah.
Yeah, so the 20, well, there you go, see? So this is interesting because, show you what. Now it's right on the turning point, effectively. So we talked about the other day. The market's run up, but it stopped on that day. So that's significant. It didn't turn the market per se, but it certainly stopped the market for that day for some reason. And it must have been December. So, Christmas holidays, look. So it's a vague, wishy-washy date to trade anyway, isn't it, really? So this would tell you then, by going sideways over the Christmas break, don't trade it, basically. It's not ready yet. So it's keeping us out of a dangerous trade at this stage, because you don't know where it's going to go from there.
So when you brought your tool out, the 30-degree tool.
Yep. Yeah, I just smiled then, that's all.
Does that actually become a secondary indicator?
No, that's a primary. That's a primary indicator for me.
Primary indicator. Okay, so the time by degrees is the first thing you see. You put it on the chart, and then you can bring your 30-degree tool out.
Yes.
Okay. And does the 30-degree tool give us that turn? The next, so yeah, from the set. So that's the first line.
Well,
where does that relate to the second line?
Well, we haven't put all the time by degrees dates in to start with, but we're just looking to see if this identifies turns in the market. So we go back to the first day, the first lesson we had about phasing the time by degrees dates. So there we go. So it doesn't line up ideally on the date that the time by degrees picked, or actually it is closer. So it's that. So that there, look, and this lines up. This lines up with there. So that's now we think, well, maybe this is roughly right.
Yeah.
And then we go back to the number 1 lesson, number 2 lesson, and we start running things off there and see if they start working. We've got to start somewhere. Better put the right thing on there. I won't get anywhere fast. Well, what do you know? hang on that high. Or is it, or is it one day out? Might be 29 days.
Yeah.
Yep.
Interesting, mate. So coming up, we've got those dates that you've got in the future. And
over here.
Yes.
No, I've just put those lines in to make it quick to pick up the points you want to pick up.
Okay. So what would be the next time by degrees in accordance to where we are now?
All right, we better go back to here then. Just give me a second. This is an actual chart ready to go. All the questions should be answered on here if I've done my homework correctly.
16th, isn't it? I think.
The next one is 16th.
16th of okay. Of May.
That's correct.
Oh, right. Nice. 16th of
16th is always time by degrees, pretty much. People take a day.
Next Tuesday.
Next Tuesday. That's interesting, mate, that you say that. The sixth, you're basically saying the middle of the month is always time by degrees.
What's the time by degrees that we've identified? Yes.
Yeah.
That's correct.
Okay. So the suggestion there is that the middle of the month tends to be a point where the market will turn.
Potentially, yes.
That's interesting that you say that. Because I've always found the middle of the month to be actually, you know, a little bit trickier, and I wonder whether that's something to do with it when it kind of
because you don't have the MRI indicator. That's why. Okay, now just as a bit of fun, because we're running out of time tonight. Okay.
Yeah.
I'll just read you this. This is a bit hilarious. So, of course, when I watch the news and observe history, as I do, time by degrees dates come up constantly, right? And as in the market, we're using the time by degrees to identify the most significant dates, because that's what we want to trade, the ones that are going to make us money.
Yeah.
Right. So when I look back through history, I think what events in history were significant in their time for whatever reason, good, bad, disasters, changes of government, all those sorts of things. I look back at those, but the weird head I've got, things that appeal to me are things like the history of Ned Kelly or the history of Bonnie and Clyde. Now, they were significant in their day, right? This is back in the 30s.
Mm-hmm.
And I'll just read you this quickly, just for a bit of fun, right? On April the 12th, so this is the history of the car that's involved with Bonnie and Clyde. You know who Bonnie and Clyde is, don't you?
Yeah, sure.
Yeah. So on April the 29th, 1934, the car was stolen by Bonnie and Clyde. On May the 20th, as a matter of interest, the house number where the car was stolen from, now this one's probably a bit out there, but the number was 2107 in the street it was in. The 21st of the 7th is significant. We'll get to this in a minute. On May the 20th, so it was April the 29th, and May the 20th, a car full of deputies sighted Bonnie and Clyde as they were on their way to plan the ambush that got Bonnie and Clyde. Bonnie and Clyde did thousands and thousands and thousands and thousands of miles in that car in a few months. And on that particular day, a car full of deputies coming from another area in the state saw them on the road. What are the chances of that? Okay, May the 23rd, Bonnie and Clyde were ambushed. June the 15th, a contract was signed because obviously the car was shot to bits on the 23rd of May. On June the 15th, you recognise that date already, the contract was signed to exhibit the death car at the Chicago World Fair. How significant is that? On June the 29th, the owners of the car signed a warrant to get the death car back, and a marshal took possession of the car on that date. On August the 22nd, by order of the federal judge, the car was returned to its original owners. On September the 18th, the car was sold and used an attraction in the hometown of the guy that bought it. On April the 22nd, 1964, the car was displayed at the New York World Fair again. on August the 4th, 1967, the first release of the movie Bonnie and Clyde. On January the 15th, 1999, Sandy Jones inspected and photographed the car and catalogued every detail of it in Las Vegas to build a replica of that car. That's a history from 1934 to 1999. Significant dates of a significant event. What do you reckon all those dates are?
Highs of the
Time by
market.
degrees.
Time by degrees. Every one of them.
Wow.
It's like Fibonacci on steroids, right?
It's like Fibonacci meets Nostradamus.
Yeah.
It's unbelievable, isn't it? It's absolutely unbelievable.
It is interesting. Yeah, it is interesting.
And so there's other insignificant events in amongst that, but they don't show up because they're insignificant events. So on our chart, our time by degrees gives us our primary points we're interested in trading, and the secondary points in between, we don't worry about those too much. This is exactly the same story.
Do you know, Phil, the reason I find all this stuff so interesting, and now you're just kind of going through that, it does make me think of Nostradamus, because obviously he wasn't a prophet and a soothsayer, but he was a physicist.
Yes,
and
he understood this stuff, you see.
He understood this stuff, yeah.
Yes.
It's really interesting stuff, mate.
It
hurts my head. I've got to be honest. It really hurts my head.
And the more you look at it,
I like it.
Yeah, the more you look at it, the more you and there's another date which doesn't come up, which is not used, but it is, and Jeff can vouch for this. It's the 9th, the 10th, or the 11th. I think it's another significant date. And when it comes up, I know when to use it because I know my charts well enough now. But
yeah.
But the 11th, what happened on the 11th of the 11th? There's three things that stick out in my mind on the 11th of the 11th.
The end of World War II.
Yes. So, yes, I remember it today. That's right.
Yeah.
There's one that you may be aware of. One of the others. The other one
is it the Twin Towers? Was that the 11th of the 11th?
I didn't look that one up.
No, it was 11th of the 9th. Or 9/11 as they call it.
Oh, yeah, 9/11. Yeah, sorry.
The other one is the Australian government, which is very historical. The Australian government was sacked. The Whitlam government was sacked. And the third one is Ned Kelly was hanged.
Right. Mad stuff, this, mate. Can I just ask? Is all you need the American and famous 21st Century book, and you've got all the time by degrees that you need? Or do you need more than that?
No, that's it.
Okay.
If you've got then you add your 30-degree indicators to that as well.
Oh, where'd you get that?
That's part of some software that's sold by Safety in the Market. I don't know whether you can buy it separate or whether you've got to buy the trading platform I've got. I'm not sure.
Okay.
But you could I could make an inquiry for you. You could make an inquiry. Yeah.
It's fascinating.
Safety in the Market in Queensland. It's GAN, WD GAN. If you've got Have you got any of GAN's books?
GAN's books.
That's where the time by degrees comes from.
Oh, really? Okay.
Excuse me.
I'm gonna end up down a rabbit hole, aren't I?
Oh, yeah, it's an interesting rabbit hole, though, isn't it?
It is a very interesting rabbit hole.
Okay. I'll look him up.
We're going to get out of here.
We got to get out of here. Yeah. Fascinating stuff, Phil. Absolutely love it. And I think it piques my interest every time. So hopefully we can meet on Sunday. I've got my radio. So Jeff, you know the radio times, and you'll be able to work.
We'll work out a time. Actually, in the next 5 minutes, we'll do exactly that.
Okay, cool. So apologies for last Sunday, Phil. I totally forgot. My daughter's had chicken pox, and I've been everything's just been a bit of a mess, but it's all right now. But anyway, okay, we'll talk in a few minutes. But yeah, thanks as always. Thanks for the guys in the room, and for all the sharing that we had. Enjoyed this session. I thought it was a really good one. Hope you guys in the room enjoyed it as well. We will be back on Monday this time, mate, because there's no bank holiday.
Yeah. First one in the month.
First one in the month. Well, you're welcome, Catherine.
Righto, guys. Thanks for being our trading buddies. Thank you, Phil, for coming in. And Ash, as always, thank you for being my big trading buddy. It's great to be here, as always. And we'll see you again on Monday. Have a great weekend, guys. Bye-bye for now.